Hey folks, welcome to Market Correction Analysis by InTheMoneyStocks.com for August 1st, 2007. If you guys have been following our past videos over the past few days since this correction began, you guys will know that we've basically called every accurate move in the markets almost to the day. And what I'd like to point out today is just some odds and ends and technical analysis that will show you guys how we reached a few of our calls and how accurate they really can be. Alright folks? And this is going to be very key because this is going to be intraday, meaning for the day trading side of things, but we're also going to talk about swing trade style moves, technical analysis as well. And they're really the same, it's just the time frame you're using is different. And I want to get into that. But let's first start with the market today. We coined the term Whipsaw Wednesday for today because it was just unbelievable today, guys. We pre-market, as going back to as early as 5 in the morning, the futures were down huge. You were talking about an open of 100 points down on the Dow. Alright, but by the open in the market, and here you can see that this is between 4 and 5 a.m. in the morning, Eastern Standard Time. You can see how down we were. We were down near 1440 on the ES, and this is the S&P futures chart again for September 07. And then by the open, which is all the way over here at 9:30, we were basically flat to positive. And what did we do? We pushed up, we pushed down, we pushed up, we pushed down, and we just were all over the place, folks. And look, we came down here again, and again, notice the resistance here. We had a specific resistance point, which is a technical point, which I'll go over, which somewhat coincided with the 50 moving average. Alright, folks, and that's what this was here, and you can see, we didn't close. Here's the 50 moving average, this gray line, and we couldn't close below it. Alright, once we got above here, we came down, we went below, but we didn't close a candle, and closing of a candle is so key, folks. That's insanely key when it comes to a technical analysis. It has to be a close below a technical breakdown line. And we couldn't do that. As you see, we closed above that 50 MA. And here we touched it again, but we didn't. We pushed up right away. And here we went below it here, below it again here, but again we didn't close below. So intraday, now again we're talking technical analysis intraday, we were looking for a close below that line as a short signal for a quick scalp on the short side. Okay, so let's draw that line in so you guys can all see what's going on here and keep up to date. And let's put that line right here. Alright, and as you guys can see, there's the line. Okay, alright, so it kind of coincided with the 50 moving average, but it was actually a more accurate line if you draw right here. Alright, and certain technical techniques we use will tell us exactly when this is going to break down, and that's why we knew over here it was going to break down. Alright, because why do you think? Now you see this spike down here, and then look at this rollover. And we caught that rollover on the SDS, which is 2 times short an ETF of the S&P, for a nice solid gain. Alright, folks? So you got this move all the way down here, and that was all captured. Now, this is where it comes in. Now you might say, well, where do you guys know how to cover? Well, our technical analysis also revealed that there was a specific target on the SPX, which we were looking for to get hit. Alright, and you might say, well, yeah, you know, how do you know that's going to happen? Well, I want to show you here, folks. I want to show you our website. So we're going to go, this is InTheMoneyStocks.com, and this is the Daily Report Archives. So you go to InTheMoneyStocks.com, click on Daily Report Archives, and go down back to July 26th. Alright, and this is what we actually said. This is a live picture, alright? And it might be too small to view it on your little screen, but you guys can always go to InTheMoneyStocks.com, Daily Report Archives, and look at July 26th, alright? And what did this say? There was a lot of technical damage done today, and 1440 is the next likely bounce on the SPX in our view. Alright? So in basically what we were saying here is that this market's going to fall till it hits 1440 on the SPX, and then it might bounce. Alright, folks? So let's take a look at the SPX chart. I'm going to bring that up next. Alright? For those of you guys that this is too small to view, I invite you to go pull it up on stockcharts.com, $SPX, and you can see. But look at this. This is today, guys, right here. Here's 1440. Where do we touch? Right there. We broke 1440 by half a point, and that was it. Alright? At that point, that was our trigger to cover our short, the SDS, which we were long the SDS, but it's short an ETF short the S&P. We went long for this move up, as our subscribers did as well. And look at this move we got up, guys. And this is all technical analysis done, alright? This was called on July 26th that the market was going to here at this point. You could have been short this whole way down. You know, as far as we were concerned, all our subscribers should have been. So anyways, folks, what I'm saying here is this is extremely accurate. Technical analysis is the only thing you should be trusting. Don't trust the media. Don't trust the company's earnings, because you never know when they'll change, or who knows, maybe it's another Enron out there. You just don't know. What I'm saying to you guys here is that the technical analysis always tells the truth. Alright? And as this is just one more example in every video we've done that this has told the exact truth. We touched 1440 here, and we rallied. In a half an hour, we rallied huge. The Dow was down something like 75 points. We rallied to close up 140 on the Dow. Huge rally in a half an hour. All based on this technical point of a bounce. Now, you guys might say, well, where is this all going? Are we going back up? Well, the question is, no, we're not really going to go back up. This was a technical bounce. There's still too many issues in the market. But what you have to remember is I preach to you guys every day that be a contrarian. When people get too bearish, go long, because they're going to squeeze the shorts. Too many shorts in the market means that too many people are going to win, and the market cannot have too many people win. The big guys upstairs, whether it's Goldman Sachs, J.P. Morgan, Merrill Lynch, Bear Stearns, with billions and billions of dollars, they are the ones that are going to win. So when too many little guys get too bearish, they have to push the market the opposite way because they don't want to pay all those little guys. All right, you have all these guys as market makers that are exchanging stock. All right, when too many people go short, that means they have gone too much on the negative side, and as a contrarian, Bear Stearns doesn't want to pay all those guys off and buy back lower, because then they're getting screwed. So what they do is they start buying and pushing it up and squeezing all these shorts out, and that's what causes a short squeeze, which is essentially what you got today. Technical bounce off 1440, called to the point out in the moneystocks.com, and then also you got a short squeeze up by all the big guys pushing it off, so the little guys had to cover here and get freaked out. And now what you're going to see is probably a couple days where the market trades flat to slightly positive. All right, we might even rally a little bit because this was a technical push up, and you're going to get a lot of little guys now going long. And once too many guys go long again, then guess what happens? We go right back down, but this time we're setting up for a big break. Okay? So I've shown you guys today the break of this trend, which was a short. I showed you guys the SPX chart at 1440 where we knew to cover and go long, and you see the move you got out. Look at this move, all right? We went down here, broke, and then this rally was extreme, folks. We didn't even stop at any of the moving averages. Here's the 20, the yellow line. Here's the 50, the gray line, and the white line is the 200. And we didn't even flinch at any of them. It shows you how powerful this buy program was. All right, folks? Okay, let's take a look at the Nasdaq quickly, guys. All right, we're going to just look at the Nasdaq chart here. It was the Nasdaq, guys, while this was a strong rally, the internals were still very poor. All right, and you have to pay attention to the internals. There were tons more declining new 52-week lows than new 52-week highs. On the New York Stock Exchange, it was something like 50 new highs to 500 or 400 new lows. It was ridiculous. My point is here that it was just off the wall. And what shows you here is that while the Dow was up 140, the Dow is only made up of 30 stocks, and it's a very skewed index because it's only 30 stocks. Who cares what 30 stocks does? We want to know what every stock does, compute it into one big index. And that's what the Nasdaq tries to give you. And as you can see, the Nasdaq only closed up 7. Yes, it was a strong rally here, but it really just went back to the highs of earlier in the day, maybe slightly higher. So while this was a strong short squeeze in to get everyone bullish again, we want to point out that it wasn't that bullish in all right? It was a little bit of a fake rally, we feel. And yes, this could cause a rally over the next couple days of a small percentage, maybe of a percentage or two max before the next move down. We still see going way lower. We're still going to test, in our view, the February lows, excuse me. All right, folks? So here you have this big reversal. This should trigger a couple days where we trade up here, and then you should see the next push down, guys. All right, and again, what I want to show you here is the stochastics. Look at how the choppy the stochastics are. The choppy stochastics pretty much are showing you what was happening up here before the fall. So in our opinion, as low as they are here, they need to get up a little higher before they can roll again. Okay, folks? So that's what we're going to look for in the coming days. This is the time now you can play the little stocks for little stocks that ran over the last 2 weeks, 200, 300% in a day. This is when you're going to start to be able to pick them up, all right? And you're going to look at ANTP. Look at this rollover. Look at this run, and when the market rolled over. Nice little bottom forming here. Yes, it could touch the 50, but in more than likelihood, I think it'll push back up over this, at least to this 20 average, and if not, spike higher as well. And I do need to say that I do hold about 800 shares of this going into tomorrow, so I do want to be honest with everyone. Yes, I am holding it, but I do feel it is a good play. You do not want to pay up on this. I strongly recommend anyone that thinks that they're going to buy tomorrow morning based on me, I don't necessarily recommend that, okay? If you get it at a decent price, that's one thing, but do not pay up 20 cents, 30 cents for this stock, all right, folks? Not worth it, too whippy. All right, another one that had a nice day today was this. Look at this little tail made, the SBEI. They had a little news afternoon, and it rallied pretty nicely here. And this might go higher today, too. I do not hold any stock of that into tomorrow. The last one I want to point out is NCST. Look at this run here, guys. Look at this jump. In one day, it went from basically $2 all the way up to $6.75, and then it's basically retraced right to the 20 moving average. This is telling me that this is a good shot if we rally in the next couple days to pick it up. Stay safe, guys. Realize this is just a technical bounce, and we will talk to you all tomorrow.